Hello, in this video, continue to read the book, The Cashflow Quadrant by Robert Kiyosaki, the one who wrote the famous Rich Dad Poor Dad book. And this is video number 83. The topic is why the rich use corporations. Why the rich use corporations. Please join me. Hello, welcome to Take a Step to a Better You. If you are new, welcome. If you're returning, appreciate it very much. In this video, we are talking about the Cashflow Quadrant, the book by Robert Kiyosaki. And the topic today is why the rich use corporations. But if you are new, I have to explain everything I do here. I'll show a schedule. I'm here Monday, I do YouTube tips. Tuesday, Wednesday, I do these books. And in the books, we get money tips, business tips. Thursday, I call it free day. I drive around, I interview someone. I'm in Virginia, USA, so I drive to places in Virginia. And then on Friday, I come live, covering everything and anything that could take us to the next level. I just pick a topic, you come discuss it. Saturday, I come live again. And this time, it's just about earning money online, affiliate marketing. So, but then I didn't mention Sunday. Sunday is motivational day. Now, Monday to Saturday, I come at 9:30 a.m. US Eastern Time. And then, but on Sunday, I deliberately come later and I come at 1:30 p.m. The other one is 9:30 a.m. This is 1:30 p.m. USA Eastern Time. So if any of that sounds interesting, with the intention of taking our lives to the next level, please consider subscribing. And when you subscribe, click on the red button. And I made it easier these days. It's on the video everywhere. Like when you look in the corner, bottom right, you see that subscribe button. When you click on it, you can subscribe from there. Or you can just look below the video. So, but after I click on the subscribe, a bell comes up. So please click on it also so you get notified when things are happening. Okay. This book is called The Cashflow Quadrant for a reason. Robert learned this from his rich dad. And let me show you what this image is all about, the Cashflow Quadrant. And those letters represent employee, that's how we earn money. That's how money comes to us. You are either in one of them or all of them. I don't know if you could be on all of them. But okay. E is employee. You earn a paycheck from somewhere. S stands for two things. Either self-employed or small business. They are both on the left. This hand could be showing the opposite because of the camera. Then on the right, we have the large business owner. And then we have an investor. The difference between a small business and large business, the large business owner can leave their business like for a month or whatever and come back and the business is still running. If you get to that level, you know you are now on the large business. Okay? So, Robert, the reason we are reading this book, he's teaching us the advantages of being on the right. And our intention here is to work hard and get to the right. I know you could be very happy on the left, but there are some many things, especially taxes, that are happening on the left, which you may not like. So the advantages are more on the right. Now, today, like I mentioned, we are on video number 83. The topic is why the rich use corporations. But I have to mention this book is free audio. You look in the description, you find a link taking you to my Amazon Audible. It's free for 1 month. But you have to search for Cashflow Quadrant to get to it. And then if you want to buy the real book like this one, Amazon.com is also linked in the description. But if you just want to watch all the videos starting from number 1, I have 2 links, one in the description and one in the pinned comment. Top comments, you click, it takes you to all the way from number 1 when I started reading it. Okay, now time for reading. 183, why the rich use corporations. Now, I pick what to name the video. Robert is just writing the book. I choose where to read, where to start, where to stop, and I pick what to call it. So I decided to call it that. But he starts with the subtitle. He calls it, The Income Stream is Sheltered. That's what he called it. But because it's not so clear, I picked something that he writes next. He says, in Rich Dad, Poor Dad, he means this book, I briefly covered why the rich use corporations. So that's where my title comes from. Why the rich use corporations. For those who follow this, please listen carefully on Friday. So there are two reasons he gives. Excuse me. The rich use corporations, number one, for asset protection. Asset protection. He explains it as, if you are rich, people tend to want to take what you have through litigation. I mean, like lawsuits. Like, oh, you did this to me, I want money from you, taking you to court, stuff like that. But the rich often don't own anything in their own names. Their assets are held in trusts and corporations to protect them. So that's one reason they choose corporations. You may wonder what a corporation is. That's your assignment. Go Google it. What's a corporation? Okay, well, that's one way of setting up your business. Okay, please find that. Number two, the reason why the rich use corporations is income protection. Income protection. By passing the income stream from assets through your own corporation, much of the income that's normally taken from you by the government through taxes can be sheltered. I don't know. I've been explaining this because I own a corporation. Mine is a small corporation, but I own it. And let me give a short explanation how the income, what he's talking about. Like when I do transactions in the business, in the corporation. What happens when I make a profit? The profit is called a pass-through. Mine is an S corporation, by the way. He's talking about corporations are two kinds. There's the C, letter C. And then there is S. So mine is S. And the S one, the when you make the money, like I make a profit, the profit becomes my income. It's called the pass-through. So they just calculate and get the profit and then post it to your personal account as income. So you're taxed. They taxed me, not the corporation. But for the C corporation, I think he's more referring to the C, where it's so separate, everything is done. Sometimes they say corporations are people. Everything is like a person. So that's the one I think he's mostly referring to. Everything is done in there. It pays its own taxes. Like, it's very interesting actually when you see corporations. They behave like people. They even give in tax IDs. So I'm not getting into the detail why he said the way he was explaining it, but I wanted to show you what it means, the corporation. Okay. Now, he continues to say, the harsh reality is that, now you think about, he talks about two scenarios. Please be careful. I want you to understand this, especially. I'm talking to a specific audience in the camera there, those who come on Friday. Listen to these two differences. The harsh reality is that for employees, if you're an employee, the sequence of events is like this. He put here something, he should do something, but I can say, you can, I think, understand. He says, you earn money, then he puts an arrow going down. You pay taxes, then an arrow going down. You spend the money. You can't make it go sideways. He made it going down. Like, you earn the money, you get taxed, then you spend the money. That means you pay everything with after-tax dollars. They say after-tax money, after-tax dollars. If you earned, let me make it an example. Give you an example. If you earned $1,000 and you're taxed, the tax is maybe 1,000, maybe 300. So you remain with 700. That's what he's saying. But let's get to the other one. He has another example for the corporation person. So remember, when you are a person, an employee, you get your 1,000, they take off 300, then you have 700 left. Okay? So he says, as an employee, your earnings are taxed and taken through withholding taxes even before you get your paycheck. See, they took off the 300, you get only 700. These are my numbers, by the way. They are not Robert's numbers. So if an employee is paid, he has another one. If an employee is paid $30,000 per year, By the time the government gets through with it, it's down to 15,000. They took 50% actually in his example. With this 15,000, you must then pay your mortgage and all your other expenses. So you have only 50,000 left, according to his example. I didn't even look at his example before I gave mine. Okay. If you pass your income stream through a corporate entity, now, for the corporate person, the pattern would look like this. Remember, the other one was earn money, get taxed, spend. This one is earn money, spend, then get taxed. So, for example, let me see if I can explain this connected to the past one. You earn $1,000, you spend and spend and spend. You may spend all of it. You may spend all of it. You hear businesses making losses. You may spend, okay, let's say you spend 900. You have just 100 left. That's where you pay the taxes. You pay the tax on what's left if you are in a business. You see the example? You pay less taxes, sometimes no taxes, because you could decide to spend all of it and there's nothing, so you don't have any taxes, and it's allowed. So let's continue to read. I hope that was clear, right? You earn, you spend, then you're taxed. By passing the income stream from the 30,000 through a corporation, you can expense much of the earnings before the government gets their hands on it. If you own the corporation, you make the rules as long as it conforms to the tax code. Don't do anything illegal. You need to do things that are legal, okay? For example, no, I don't know that I want to give all this example. Oh my God, let's see. Okay, maybe let me read it to be fair to him. For example, if you make the rules, you can write into the bylaws of the corporation, the rules of the corporation, of your company, that child care, like taking care of a child, is part of your employment package. The company may pay $400 per month, for example, for child care out of pre-tax dollars. That means you pay before you are taxed. Now they're saying you could pay $400 per month, and then if you pay for it with after tax dollars, you have to effectively earn almost $800 to pay for that same child care. Because for him, he assumed they are taking away like 50%, So he's saying when you set up your corporation so that the child care is taxed, is paid, like it's allowed, then you in all those expenses that you are deducting, you can deduct child care too before you are taxed. That's what he's saying. Now, the list is long and the requirements are specific as to what an owner of a corporation can write off that an employee cannot. Certain travel expenses can be written off with the pre-tax dollars as long as you can document that you conducted business, such as the board meeting on the trip. Just make sure you follow the rules. Even retirement plans are different for owners and employees. In many instances, having said that's a statement actually. I have to read it again. Even retirement plans are different for owners and employees. In many instances. Having said all of this, I want to stress that you must follow the required regulations to make expenses deductible. I believe in taking advantage of the legal deductions allowed by the tax code, but I do not recommend breaking the law. I'm reading the last paragraph. Again, the key to taking advantage of some of these provisions in which quadrant you earn your income. Again, the key to taking advantage of some of these provisions is which quadrant you earn your income from. If all your income is generated as an employee from a company that you don't own or control, there is little income or asset protection available to you. The very last one now. That's why I recommend that if you are an employee, keep your job, but begin to spend time in the B and OI quadrants. Your road to faster freedom is through those two quadrants. To feel more financially secure, the secret is to operate in more than one quadrant. So you could be like an employee and also doing some investing. You could be, it's like he wants you to start doing some stuff on the right. I mean, start slowly, learning and putting in practice. But in the end, he wants you on the right. Okay, that's the end of 83. Now, I think I'll try to make it shorter again because I promise, let me make them a little bit shorter so you don't have to watch too long for those of you who come on Friday. Now, my takeaway for that, what I can add, remember he said that corporations are allowed to deduct expenses. I can tell you that my S corporation, like when I traveled, one time I had to travel to go for, with affiliate marketing. If you really are serious about affiliate marketing, you can go to events. Events, that's when everyone gathers. All those people who promote the company, whatever that offer is, they gather and you get to meet the owners and see. So I traveled one time and I saw how they do it. So I know how they do it. Now, that journey of traveling, air ticket, hotel, everything was paid for by my business because it's what I do. I mean, it's recorded as something I do. He said you have to do it legally. Yes, you have to come and show everything you did when you went. And the expense, by the way, wasn't cheap. It's not cheap to do that. Remember, air ticket and hotel, and I think it was two nights. Normally they have these events. They go like the whole weekend. But I remember for me, I came like a day back earlier. So all that can be paid for, deducted, which is a huge advantage, and the advantage of corporations. But it can be actually a limited liability company. I have a whole video about the types, the business structures, and depending on how, as long as you're not doing it in your name, like you're doing everything, like you separate yourself from the business, there are so many things that can be done to help you, especially with taxes and many other things, and the lawsuits that we're talking about. That's my 2 cents. Please add a comment. What do you think? Is this too complicated? When you get to do, for those of you who are watching me, some of you actually privately talk to me about, oh, I'm going to start a business with so and so. Please avoid partnerships, the old simple partnerships, although they are limited partnerships, but partnerships, they have their disadvantages. Try to avoid. If you don't have to do it, don't do it. Read some more about it. Also, the old kind of partnerships. When someone dies, you have to know that. When someone dies, it gets dissolved. It can't continue. So there are those advantages, but others also problems that come with being in partnership. So read about some more. You can create your own business alone and register it. It's doable. And put it like limited on it, like how they do LLC here. Where you are, if you are international, it could be like a limited, or just a company. You can start the company. It's doable. Like I always end them, I say, take very good care of yourself, take very good care of your families, take very good care of your health. Leave a comment for me. Take a step to better you. Bye-bye.